It's the Whiskey Wizard.
Hello and welcome to the Whiskey Wizard, where we say that whiskey making takes scientific knowledge, an artisan's skill and dedication, and a bit of the wizard's alchemy of light, air, earth, and fire. Okay, tonight I want to discuss whiskey as an investment. Maybe some of you already have a lot in your vault at home, so to speak, but for most of us, me included, probably the collection is generally for drinking. Maybe you keep some things to trade and barter with, and that's useful as well. But have you really thought about whiskey as a true bona fide investment? Well, maybe we all should. Look at high-end whiskey, drop for drop, has increased on average 500% in the last decade, according to Worth magazine. According to the Wealth Report from Knight Frank, rare whiskey has been the best performing collectible the past decade. Knight Frank says the Scotch whiskey market is enormous. To the UK economy, it accounts for around 25% of UK food and drinks exports, with more than 90% of Scotch production sold abroad. Broadly speaking, the luxury whiskey investment market is booming, and as a result, the potential for long-term growth is enormous as demand is increasingly high and supply finite. 2019 saw a new record set for the most paid at auction for a bottle of the good stuff. A 60-year-old Macallan from 1926 fetched just north of $1.8 million at Sotheby's in London. With Macallan on the verge of releasing an ultra-small batch of bottles of 71, 74, and 78-year-old Scotch, the latter being the oldest Macallan that has ever been released, that record is unlikely to stand for very long. American whiskeys have gotten in on the action too. A barrel of Michter's recently changed hands at a charity auction for $210,000, the highest amount ever paid for a single cask of bourbon. Forget the huge demand that has spawned this huge secondary market for products like Weller's and Blanton's, not to mention Pappy. Japanese bottlings are also faring quite well. A 52-year-old Karuizawa recently went for nearly $500,000, and interest in Japan's oldest and rarest stocks shows no signs of waning. Okay, so the numbers speak for themselves, but seriously, is whiskey a real way to diversify your portfolio? As someone who has just bought a few thousand barrels of Kentucky bourbon, Ben Tsai of Wave Financial certainly thinks so. Wave Financial is an asset management firm that garnered a lot of attention when they announced their Kentucky Whiskey Digital Fund. The closed-end fund is buying up newly filled casks of spirits from Wilderness Trail Distillery to sit on for 4 to 6 years before selling the mature stock either back to the distillery or other bourbon brands, to cask brokers, or to overseas markets. With an agreement to lay down and store as many as 20,000 barrels of the good stuff at Wilderness Trail, the fund could grow to $25 million. Newly filled casks can be bought cheaply as there is relatively little value in ultra-high proof immature spirits, while aged quality stock that is ready for bottling fetches an impressive premium. According to Wave's research, barrels typically appreciate 3 to 5 times steadily over 5 years. In an industry where distilleries trade barrels and non-distillery producers buy and bottle matured stock, they say that they are confident that the fund will have few issues exiting their investment. The broker market is robust here in the U.S., both for domestic consumption and for exports to other countries, and demand is expected to increase over the next few years, they explain. If the numbers prove true, the fund is hoping to deliver investors a not too shabby internal rate of return of 20% over a 5-year period. Investing in alcohol is by no means a new trend. People have been investing in wine for many hundreds of years. Whiskey has been bought and sold for just as long as wine, but the whiskey market has become much more active in recent years. Sotheby's says that whiskey went from 2% of their portfolio in 2012 to almost 20% by 2019. Some whiskey market analysts believe that the price of whiskey has increased rapidly due to demand from China. Chinese buyers often stockpile expensive whiskey and use it as a gift for business partners. Consumers are also more interested in trying rare whiskeys than they once were. There are three main options for investing in whiskey: investing in bottles of valuable whiskey, investing in whiskey maturation, or investing in a distillery. Each investment option has certain advantages and disadvantages. Perhaps the most obvious way to begin investing in whiskey is to purchase some highly valuable collectible whiskeys. As an investor, one simply stores these valuable bottles for several years. As their value increases, then they are sold for profit. The primary challenge with this investment strategy is choosing whiskeys that are a worthwhile investment. Most whiskey investors will look for bottles that are extremely rare, as their scarcity will increase their value very quickly. They will often look for limited edition runs or bottles that have come from silent distilleries, which are distilleries that have closed down. Okay, the second way to invest in whiskey is to buy a cask of whiskey from a distillery and age it yourself, have them age it for you in their stores, or have it aged at one of the many contract aging facilities found throughout most major whiskey regions. Also, you can just buy shares in a cask or casks through some of the better whiskey investment firms out there. There are plenty of resources out there if you take a little time yourself to research. Make sure you have many references and indications that the investment entity is reputable and has a good track record. Likely you can find a cask investing option that is best suited to what you are looking for. Last, there is investing in the distilling companies themselves. This would be the closest to traditional investing by investing in those that are traded publicly. For example, the famous contract distiller in Indiana, MGP, is traded as MGPI on the stock exchange, and the current stock price is $72 a share. You can also find large distilling conglomerates like Diageo, which is listed as DEO with a current share price of $202 a share. And I'm sure there are even whiskey stock funds that will basically track along with the growth and success of the whiskey industry as a whole. So there's a range of great ways to profit from the popularity of whiskey and the solid year-over-year growth of the worldwide whiskey market. But the Whiskey Roundtable urges you to do your homework first and be sure to find the option that's right for you and your level of interest, time, and risk tolerance. We extend to you all our wishes for happy and profitable investing. This is Douglas Dunbar, the Whiskey Wizard for the Whiskey Roundtable. Cheers, Slàinte mhath, and now